Okay, so buenos días, damas y caballeros, and buenas noches. My name is Cheng Han. I'm professor at Tongji University. It's a great pleasure for me to kind of moderate and also host this session. And very much looking forward to our discussion and also the insight sharing from the ladies and gentlemen from the EGADE Business School. First of all, let me just walk you through the whole process. We're going to invite each of these experts to give a 15 minutes speech and presentation, followed by a very quick comment as well as a Q&A. And then we will have at the end of 3 sessions, a compound Q&A session towards the end. First of all, I'm very delighted to invite Professor Montalvo to share some of his insights on the Mexican economy. Professor Montalvo is an expert in this field. He is the director of the EGADE Business School, and also just like me, had multiple experiences in the field of industry, in consulting, also as an entrepreneur, definitely as a professor. So Professor Montalvo is going to provide us more insights on the latest development on Mexican economy and also foreign direct investment issues. Thank you for joining us, Professor Montalvo. The floor is yours.
Thank you very much. I truly appreciate that. Ni hao ma. It is my real pleasure to join everybody today. Good night in Mexico, good morning in China. Well, in my case, I'm going to share some insights and some figures regarding the Mexican economy. And one of the important things to understand in the case of Mexico is the GDP composition. The Mexican economy has been evolving with the time, but mainly one of the most important points for us in the economy is the consumption. Most of our economy, in spite of what most of people believes, relies on consumption, followed by trade. And we have a deficit in the balance of trade, but it's not so unbalanced. We do import more than what we are exporting, but this importing is because in Mexico we do, like in the case of China and some other countries, a lot of manufacturing, assembling, and things like this in different types of industries, electronic manufacturing, automotive industry, and more recently, the airplanes and some other industries, which is important. And this is followed by investment and then followed by government expenditures. Of course, if we take the picture, the latest picture of what has been going on in the case of Mexico, it is important to understand that this is right now the second year of the current government. And in the first year of most of the governments, when they're in the first year of their administration, most of the time, they do not use the whole budget. At least that has happened in the history of Mexico. Another important thing to understand is that most of the Mexican economy, 64.5% relies on services. Most of the Mexican economy relies on that. I still have some people that ask me, so it is not that the Mexican economy was depending more on manufacturing or in some cases on agriculture. No, the Mexican economy relies more on services. Actually, one of the main sources of income for the Mexican economy is tourism. Mexico is among the top 10 countries that do have more tourists coming into the country. Of course, if we do not take into account what happened last year, this is pre-pandemic. Around 32% is industry and 3.6% is agriculture. But in terms of productivity, and this is an important thing for us to consider, there are still some chances to go into more detail in terms of that. The labor force that works in agricultural sector is 13.4% of the total. And of course, it does contribute to 3.6% of the agriculture in terms of GDP. But when it comes to industry, we can see that, yes, automatization of different processes and the use of very, very high-end processes in different industries does bring this into the picture. 24.1% of the industry is in terms of the labor force, and a labor force that does contribute to around 32% of the GDP. And in the case of services, since most of the services like tourism is face-to-face, and of course that cannot be replaced by any other type in most of the cases. So that's why the labor force is kind of balanced. Around 62% of the labor force works on services and represents 64.5%. One of the important things to consider is what is being expected for the Mexican economy for this year and for the next one. Here are different forecasts. Of course, you have to be really cautious when it comes to coming to different interpretations of what does it means. It has been adjusted, and it keeps being adjusted every trimester or every quarter. So for some, like in the case of Citigroup, they say that the Mexican economy could grow at a minimum of 3.3%. And some others, they believe that Mexican economy can grow this year above 6%. The government, through the Minister of Economics, they have already said, and the Minister of Finance, that the Mexican economy could grow around 6.1% as we speak. Of course, right now, for some people, it might be very premature to say that this is going to happen, but this is the picture as we speak. For the next year, things are going to change a little bit. The economy right now is suffering an adjustment coming from a negative growth in 2020 last year. This year is going to be, of course, the trend is going to imply an important growth for the Mexican economy. But next year, what we expect is a slowdown a little bit, but this is a slowdown in terms of adjustment. It would be around 3.3%, and that's what the figures, the federal figures, they are telling us. One important thing that we have to understand about Mexico is the differences across the country. And in the case of Mexico, we have very interesting differences, and it is important to understand what happens. Mexico, I always say, is like in the case of Italy. So we have one portion of the country which is rich, is wealthy, and one other portion that is not in the same situation. One thing is we have some states that are more developed in terms of everything, in terms of education, in terms of industry, and in terms of some other things. Here we can see in this part, what it comes to the primary sector, mostly focused on agriculture. As you can see, is more towards, if it is the half of the country, more towards the south, the southern part. By the way, these three states right here, Oaxaca, Guerrero, Oaxaca, and Chiapas, they are the poorest three states in the country. If we compare them with the three richest, the difference is important. Here is the secondary sector, and in the case of the industry, it's interesting to see how this is being developed more and biased towards the northern part of the country. And here what we have is the case of the tertiary sector, which is more biased towards the services. And then you can come into the picture of what's going on right here. This is interesting to say, because at the end of the day, the development of Mexico is taking place in different states at different rates. And this is something important. We have experienced cases like in the last years, like the case of Querétaro, and Querétaro experienced some growth rates around 8-9%, like the rates that you were experiencing in the case of China. We have had these cases in some other central states, and it has been really interesting. Right now, last year, of course, the economy, generally speaking, in all the states, it was slowing down. But of course, right now, what we expect for the next year is going to be different. There are some important characteristics, and I remember, I have visited like 15 times China, and I remember one of the things, talking to some of my colleagues, they were mentioning once, it was the different engines that China was experiencing, having these big cities. Of course, we cannot compare sometimes the size of the cities between Mexico and China, except for Mexico City probably, and Guadalajara and Monterrey. But it's interesting that in Mexico, as a country, we have 12 cities above 1 million people, the population. And this is important because that means different engines for production, different engines for consumption, and different engines for promoting and contributing to the economic activity of the country. And if we do consider all those cities that the population lies between 100,000 and 1 million, we have 122 cities. So that's an important figure for us to consider in terms of, again, investment, production, and consumption. So that's why if we look at the distribution, what we can find is that they are geographically distributed across the whole country. And this is something important. For us in Mexico, well, yes, geography matters. In the case of Mexico, every day we do trade in terms of products and services with the United States, 1.7 billion US dollars in products and services on a daily basis. And this is something really important. The busiest border in the world is between the city of Tijuana and the city of San Diego. And this is something really important, and this is a very, very interesting comparative advantage that Mexico may have regarding the North American market. And this is something that for some companies and for some business people is something that really is becoming an important figure and an important fact when it comes to do business with Mexico. What do we have in terms of Mexican exports is that the Mexican economy has been with the time looking for more diversification. What do we export more right now is cars, followed by computers and crude petroleum. Actually, this government, they are really interested in more refineries. So right now, Mexico is one of the top producers of oil in the world. But right now, the country is looking for more to become more autonomous when it comes to fuels, above all refined fuels. And this is also something interesting because when it comes to assembling, there are a lot of exports also of vehicle parts and delivery trucks. When it comes to medical instruments, Mexico has become a very important place to do that. Who are we trading more with? And this is good or bad, depending on how do you see it. For some people, it's a good thing because we are trading with our neighbor and we're trading with our best and closest trading partner. Is 71%, 75% of our exports go to the United States. Mexico is a country that has a lot of trade agreements. We have 14 trade agreements, and we do have a trade with more than 50 countries in the world. The latest one was with the United Kingdom. It was re-signed because it was already in place. But the interesting thing is that mostly we're focusing in the UNSMCA, right? So previously it was a North American Free Trade Agreement. So it's really interesting to see the whole opportunities that Mexico has to diversify, as in the case of the exports, to diversify the trade with many other economies. Here is China. China is actually the second trading partner when it comes to exports. But when it comes to imports, as you can see, most of the imports of our Mexican economy is intermediary goods. So we do import a lot of intermediary goods because we do a lot of manufacturing, as in the case of China, in different proportions. But as you can see, with the United States, we have a surplus in terms of trade. We do export more to the United States than what we import. But when it comes to China, there are a lot of opportunities. China is, again, also the second most important partner when it comes to trade in terms of imports. So yes, there is a deficit in terms of trade with China, but it's interesting because the type of products that we are importing, there are a lot of opportunities and chances to come up with some other different strategies and to reinforce the relationship with such an important country as in the case of China. It's interesting to see where the foreign direct investment inflows come from. And most of them, as you can see right here, it comes in the case of tourism, okay, manufacturing, and financial, trade, mining, construction, and transportation. Most of them are being focused, 56% in the case of manufacturing, followed to financial and trade. It is interesting because the Mexican peso in the emerging economies in this part of the world plays an important role, and that's why also it does suffer a volatility, which is important. So that's why to bring certainty to investors and to bring certainty in terms of how well fortifies the Mexican economy is very important to understand what happens here on national basis. How it has been evolving, well, as you can see right now, it went down, it was going up, down, but it has kind of been sustainable, taking into account that this was kind of an outlier in 2013, and last year it was a difficult time for many different countries. Well, right now, as we speak in 2021, for some investors, there are good signals of what may happen in terms of foreign direct investment. What are the main countries bringing FDI into Mexico? Well, the first one is the United States, followed by Canada. Of course, at this part of the trade agreement that we have been having in the last years, since 1994, together with these two countries, followed by Spain, Germany, UK. And there are a lot of room still for different industries in tourism, in construction, construction of different infrastructures. Right now, there are some investments that are taking place. And this is something really interesting in terms of mining, in terms of energy, and in terms of some other things that might be interesting, of course, considering as well the manufacturing sector. So at the end of the day, one of the important things, of course, it's difficult to say this to a Chinese audience, but Mexico is a country with around 127 million people. So in terms of population, it's a big country, of course, not considering, and we cannot compare it with China and with India. But it's interesting because then you have an important part of the population with purchasing power. So that brings important and interesting opportunities for these kind of countries. So that's basically what I wanted to share with you. And I don't know if it is going to be at the end, but I'm going to be very delighted to answer all your questions. Thank you very much.
Thank you very much, Professor Montalvo. Exactly on time. I think we still have 1 or 2 minutes to ask questions before we then consolidate all the 3 presentations and have a discussion at the end. One question from my side. What is the total contribution of investment for the Mexican GDP? So you just shown the contribution of FDI, the size of FDI. What is the total investment contributing to GDP? Because if you look at the Chinese GDP, it's almost close to 45, even beyond 45%. Because one of the secret for the Chinese GDP growth over the last 30 years is that investment has played a huge role. So what is the situation in Mexico?
Well, in Mexico, it has been kind of the same. But the important thing is that most of it, as you can see right here, it comes from consumption. In the case of investment, it's less actually than 20%. But still is very, very important for what we see. And the important thing and the big discussion right now in Mexico is how do we classify this investment? Because what do we look for is the impact of investment. So infrastructure must be something really important. And how is it that we are going to measure what's going on regarding this?
And I was also thinking when you mentioned that the major investor, FDI investor in Mexico, US and Canada. The reason I believe behind is that you belong to the NAFTA. On the other hand, we all know there has been some ongoing trade dispute between China and the US. Recently, I've been also consulting some Chinese companies, and recently one of the entrepreneurs mentioned he was interested in make an investment in Mexico, because this might help them to secure their export to the US in a more sustainable manner in the future to mitigate some risks. What's your opinion on this type of strategy?
Yeah, definitely. Many different, yes. I mean, in the case of the United States and Canada, yes, they do invest in Mexico due to the USMCA free trade agreement. And, but yes, many different companies from all over the world, they come to Mexico for many different reasons. One of them is, of course, because it's a bridge and a door of entrance to the US economy and to the US market. But also it's interesting because many companies that have landed in Mexico, they came to realize that the Mexican market is also a very important market in terms of size and in terms of purchasing power. So that's also brings another opportunity. So that's why you can see many different companies coming from India, for instance. Tata, they have a very, very interesting investment in Mexico. Actually, I was talking to some of the directors right here. And right now, Tata represents the fourth market for the company. And what they expect in the coming 5 years is for Mexican market to become the third operation for them worldwide. So it's interesting when you see what's going on regarding this in terms of many things: market size, purchasing power, and also infrastructure. Even when we have a lot of opportunities yet to develop in terms of developing more infrastructure, there are very, very important things. We have important ports that connects with Europe from one side and with Asia on the other hand side. We have the railroads, we have the roads, and this is really interesting to connect. One of the main things right now is how do we connect Mexico more with the Latin American market? Because if you consider that, considering Mexico in between Latin America and in between North America, which, by the way, Mexico is being considered part of North America. That's why it's the North American Free Trade Agreement, Canada, US, and Mexico. It is really interesting, all the bridges that you can build with Mexico.
Thank you. Thank you very much for these very useful insight. Now I would like to invite Professor Jorge Martinez to join us. Professor Martinez is professor also at EGADE. He is also director of the Center for Innovation Research and Finance topic. He also board member of one of the large banks, Banco in Bajío in Mexico, as well as entrepreneur, founder of a consulting company and a boutique investment firm. So let's welcome Professor Martinez to share his insight on the currency issue in Mexico.
Hi, and good morning, everyone. Wherever you are, and thank you very much. It's an honor to be with you, and thank you, Juan, for the invitation, and Professor Sen also for your introduction. And let's start talking about the Mexican financial system, if you will, and the interesting elements that this could render for Chinese investors. So let me start with I have several presentations, so I'll be changing a little bit, trying to explain the most important aspects of the Mexican financial system and how does this system fits into the context of the global market. So let me go and show you the financing flows in the Mexican economy. First of all, you would understand that banks finance government, and that would be for about 326 billion pesos, and also families fund the government, and this is for 1.2 trillion pesos, and this would be through the savings that families put on government instruments. The biggest government instruments, the ones that takes the most of the Mexican families, would be called CETES, Certificados de la Tesorería, and those are equivalent to treasury bills. Then also firms fund the government also through CETES and many other instruments. In total in Mexico, that would be around $300 billion if we put it in dollars. although this is 1.1 trillion pesos if we look at it in pesos. So and this would represent roughly 30% of the GDP. And then also we have, of course, from families and firms, some subsidies and transfers. And we have from banks to families, the total credit to the families, this would be 1.5 trillion pesos. And also from banks to firms, there is financing from, this is the biggest number of all, the financing from banks to firms. There are around 5 million firms in Mexico, and but most of them are very little, less than 20 workers. And this number is 2 trillion pesos at June 2017, like 4 years ago. To have all these numbers complete, these numbers are a little out of date because it takes some time to have them all together. So, and then we have, of course, firms and families and the government who deposit money at the banks. And this would be really the biggest number of all. This would be 7.6 million trillion pesos. Now, let's compare a little bit the numbers for China and Mexico. The total bank assets in Mexico would be something around the 20% of its own GDP. That would be, as I said, around 260 billion dollars, if I put it in dollars. And in China, this number would be roughly 20 times higher. And also, if we see the stock market, in Mexico, the stock market is worth like 400 billion dollars, but in China, that would be again like 20 times higher, 20 times bigger. That would be 8.5 trillion dollars compared to the same number in the US. The total stock market cap in the US at 2019, that would be 30 trillion, again, 8.5 trillion for China and 400 billion for Mexico. And total assets in the US, it would be roughly 6 trillion, and again for China, something around 4 trillion, and in Mexico, 262 billion. So if we see all this, we can understand the differences in the measurements of the market. Now let me show you a very interesting element of our economy, which is the exchange rate. So please bear with me the lines that you see here. Let's first see the real exchange rate. I mean, let me put it another way. This is the actual, not the real, the actual exchange rate until 2020. And as you can see, we are roughly around there, something around 20 pesos per dollar, just like your exchange rate is yesterday was 6.42 yuans per dollar. Well, ours is around 20 pesos per dollar, as you can see here in the blue line. You also see here a red line, which is the average, but for each moment since 1979, the average justified, or if you will, theoretical exchange rate from pesos to dollars. That would be the justified or theoretical exchange rate, which, as you can see here, is something around 16 pesos per dollar. So we are undervalued against the US dollar. And you can see the difference between red and blue. I put it here in these mountains and valleys by green. So you can see here, a big mountain of green is an undervaluation. The exchange rate is too expensive in the dollar. So this is gain for the exporters. And then you have a time that, and as you can see here, this is almost something like 6 years. You see here in the 90s. This is a super peso, a very strong Mexican peso, and then again a very weak peso, and a very strong peso again, a very weak one, very strong, very weak, very strong, and now we are again on a very weak peso. So you can see here a cycle. You see a cycle in which there is a weak peso, then a strong one, then a weak one, then a strong one, then a weak one, a weak one, a strong, and we are here now in a very long period of a very weak peso, and sometimes this really has to do very much with the total returns that anyone can gain from Mexico. If you see the better times for investing in Mexico, if you compare to the US, it will be moments in which the peso is strong, because you have your return in pesos, and you would also have the extra return for the US dollar exchange, which will be on your favor. So I'm going to stop in this presentation and go for another one, which is really important. Let me show you this one. In this presentation here, this is in my committee, in my company. I'm going to show you very interesting elements here very quickly. How does Mexico compare, and China, as the better markets to do investments? And in the colors, you can see the credit default swap. That would be the risk. The red is highly risky, and the green is very low risk in terms of the credit default swap, or the premium that the markets charge for the financial risk. So as you can see, in 23 years, the better investment was the US, 8.35 return per year in average. And in 20 years, it was Australia, and in the second row is Hong Kong. And then at 15 years, Hong Kong was the best of all the developed markets. At 10 years, it was the US. At 5 years, it was the US. But Hong Kong has been always very close. And these are developed markets. Now let's see some emerging markets. Well, these are the developed markets when you see the real height of the thing. I mean, it's not the same to be the best at 15 years at this height than to be the best at 15 years at this height, because the number is, of course, much higher. And then you see these are emerging markets. And as you can see, Mexico was the third better market for 23 years. This is at 2018. And then for 20 years, it was Russia. And then in 15 years, it was Brazil. And the fourth better market was China, as we see here. And in 10 years, it was Thailand. And then China was in number 6, and so on. As you can see, at 5 years, the fourth one was China, and so on and so forth. And again, it's different when you see the height of those. So let me go now to something that is really interesting. The rolling returns. So let me explain this, because this is very important, and how the exchange rate will play here, and how difficult and how dangerous it is to invest in a country like Mexico without regards to the exchange rate. The exchange rate is very important. So let me show you the rolling compound annual growth rates. So these are returns, including dividends, for the US stock market for 5-year average in blue, and then 7-year in gray, 8-year in yellow, and so on, as you can see here. So you can see again, you can see also there's a cycle. There's a very nice, rolling returns towards 20% a year, and then it goes down in the 80s to around 10, and again up in the 90s, up to the crash, and all of them come down. The returns are very bad, even negative. I remember these are rolling windows of 7 years, 8 years, 9 years, annual returns in average. And then it starts to go better until 2018. So this is the US, and these are rolling for more longer windows. And as you can see, recently, I mean, the last the last 12 years, we've seen returns of around 10% rolling in 20 years. So for example, this element that you see here, it would be, if I use my laser point, this element here would be the average of 20 years at 2015 for the U.S. stock market, which will come around 7%. If you see now you see here Mexico. Well, this is the United States, and you see Mexico here. You see bigger numbers, 30%, and then going down, and this is very difficult to see because our stock market in dollars, including dividends, in rolling windows, have been going down, and especially because of the exchange rate since the crisis in 2008. Now, this is the important part here. Let me show you this that you see here. The graph that I just showed you of the exchange rate, I put it here together with the rolling window of the spread between Mexico and the US. So let me explain. When you see that these colors go above zero, Mexico is better than the US. And also you see behind the years in which the peso was strong, you see here on gray, all this time, the peso was a very strong currency, and with a little bit of lag, maybe 5 years or four years lagging, when the peso is strong, 4 years after that, the returns on Mexico start to be better than the returns on the United States. Then you see a weak peso and things start going south, and the US is better than Mexico all this time. And also, as you can see, the peso is weak. So there is a very strong correlation between the currency, and this also happens with China, as we see in this graph. This is China minus the US. And as you can see, China was better than the US in 2002, 2004, well, especially in 2006 and 7, 2008, even 2009 and 10 and 11 and 12. And then after 2013, again, just like before 2005, the US gives more return than China. You see the comparison between the two. And here you see the same for a longer spread for 20 years, 16 years, 14 years, and so on. Now, let me again change presentations very quickly to show you how do you get your returns year by year. And here you see for the whole world, the stock markets, you can see for 100 years, the average return, here is China. We don't have 100 years of a stock market, but we have 20 years, and we have 15, and we have 10, and we have 5 years. And we see Mexico here also, and we see the US. And let me show you a final caveat about returns and the opportunities that you will find also. When you, for example, last year, Mexico has given a return of around 100%, and the US has given a return of around 80%, and China something around there. So the year has been, of course, very good because we are rebounding from the COVID crisis, the pandemic, and the returns are very good. But as you already saw, when we take this into a long windows, the returns smooth out, and also are very dependent upon the exchange rate. And this is true for China, and this is very true also for Mexico. So again, let me show you our last graph that is last table that is really interesting for me, and I would like to share it with you. So this is the Standard & Poor's, and what you see here are the 5-year CAGRs for the Standard & Poor's. when you roll it, 2001, the last 5 years, they got 0.5, and then 2002, they got 6% for each year for 5 years before. And in yellow, you see 10 years before at 2002, average return for the US stock market. So this is 2.9, and then the next window, 7.1, the next window, 7.4, and then 7.7, and then 7.3, and then 6.9. So this is the US, and now look at Mexico. So again, these are rolling returns for 10-year periods in yearly average, 18, 15, 19, 16, 10, 4, and 0.3. So these last 2 decades have been very bad, but in general, Mexico has given a very nice return. And this is due, again, in large part to the peso, and in large part because an emerging market has more to grow than a developed market. So what I wanted to show you is how the returns in the financial markets behave, and the big opportunities that I think with the trade rearrangement that the pandemic has brought to the world in general, they will be, especially among the giants like China and the US, there will be rearrangements in trade that will reaccommodate the flows from one country to another. And I guess there will be high opportunities for Chinese firms to set in Mexico and fund in pesos. And if the peso constantly depreciate, that would mean that a Chinese firm funding in pesos for operations that will be directed at exporting at the US through a Mexican company, that I see that has a lot of future. In the last months of last year, we see a lot of Chinese companies that were producing in the south of the US border coming to the north of Mexico to set up their plants, because Mexico is a more amicable country for trade. And I see a lot of opportunities for Chinese firms to fund themselves in pesos, which is a currency that is weaker than the yuan, and also export to the US. As Raul was explaining, that is just a huge channel, with a lot of opportunity. And this rearrangement, I guess everybody wins. So this is what I wanted to say, and I guess we are roughly on the time allotted to the presentation. And well, I'll be happy to take some questions.
Thank you, Professor Martinez. I have one question. So look at the current peso situation, the exchange rate. I remember correctly, the current cycle is a weak peso cycle, right? That's also one of the argument. It's a best timing to invest or putting up an investment fund or fund in Mexico. At the same time, we see that the Chinese currency start to appreciate against the US dollar. Basically, then you have two effects at the same time. What's your assessment or your prediction in terms how sustainable will be these two advantages? How long peso will remain weak and how strong the RMB will remain? Because if that is a just short-term phenomenon, then I believe it also comes with a lot of risks.
Yeah, I see that the pandemic has brought a lot of demand for commodities. And half of that demand comes from China, precisely, and a lot of commodities, especially the steel, as you see, the copper and some other industrial metals have gone up big time. And most of the time, when that happens, the U.S. dollar goes down. So that has meant that the peso has appreciated along this year, 2021. On the lines of 4%, 3%, 2.5%, 3%, 4%, and also the Chinese yuan has the renminbi has appreciated. When you see the exchange, when you see the interest rates, and you see the real interest rates, the level that is equipable, the level that is correlated, directly correlated to the exchange rate of the yuan to the US dollar, would be a lower rate, something on the lines of 620, I guess, or maybe 610. So yes, I see the Chinese yuan appreciating a little bit more, and also the peso maybe staying around 20 or 19 after the elections this Sunday. Maybe the elections will favor lower volatility instead of higher volatility. That means that the party in power, which is a dangerous one, maybe will lose some power, and that will be good for the peso. But I think that a Chinese company coming to Mexico will have a stronger yuan versus the peso through the dollar. And that would mean that if they fund themselves in pesos, for example, a BBB company in Mexico will pay the equivalent Mexibor, you know, something like LIBOR, which we call it TIE, which is around 4%. So you will pay around 4% plus 2 points. That's 200 bips, 200 basis points. So that would be 6% in pesos, and that will be much cheaper for a currency that will depreciate against the yuan. And also, if you put your machinery, your plants in Mexico in order to export to the US, and maybe mount yourself, if you will, into in the trade agreement that Mexico has with the US, you will have huge opportunities. And so I would think that the peso will stay at 2019, that the yuan will go down, maybe according to the real interest rate in China, to maybe 6.2, 6.1 yuans per US dollar. So that would be favorable to China.
Thank you. Another thing I've been missing in your presentation is the mentioning of inflation rate in Mexico. So because you can have 6-point interest rate but 5-point inflation, and that is also effectively also mitigating the advantage. So what is the situation in terms of inflation? Especially after the COVID, most of the central bank have been pumping liquidity into the market, which could cause a lot of problem in many markets.
Yes, the pumping of liquidity in Mexico has been not that great as the US, for example. And the government has set an agenda of being very conservative. And so, yeah, there is a 6% reading of May for inflation in Mexico. But the core measurement is lower than that. And also, we think that it's transitory due to some international goods of food, for example, some goods that have to do with international prices for agriculture goods and prices in the globe, and also elements related to the gasoline prices, which also have gone up. That can happen, and maybe will happen for the next few months, but it will be transitory. So really the inflation rate that you should expect in Mexico should be around 4. So for a BBB or a single A company, by Fitch or by Standard & Poor's, a Chinese company in Mexico with a Mexican partner that puts his money through the stock market, you will find very surely a fixed rate of around 8%. So if you take out the inflation precisely that you were mentioning, a 4% inflation at the end of this year, maybe 4.5, that will be a real rate in pesos of 3.5. But again, if you subtract the devaluation of the peso, which could be around 2% in this year, then you will have a rate equivalent in the real rate for a Chinese person of around 1.5 real rate. So that is very, very attractive if we take into account all these numbers, Professor Jan.
Thank you very much. Thank you for your insights. We might also have a chance to ask questions later on. Now I would like to welcome Professor Juan Enciso. Professor Enciso is the director of the Global One MBA at the Business School EGADE, and also a specialist and expert in the area of institution analysis. Been working for Ministry of Economy in Mexico, as well as for private sector and the insurance sector. So I'm very much looking forward to your presentation on doing business in Mexico.
Thank you very much, Professor Sheng. Good morning. Embajadora Larios, gusto saludarla. Thank you for being here with us tonight. Well, after seeing the economical and financial aspect of Mexico, let me introduce you in another part of the country, the business culture. So, welcome to Mexico. Bienvenidos a Mexico, colleagues. It's a pleasure to be here with you. Let me go a small trip to our country to show you some other things related to business and culture. Right? So this is Mexico at glance, as we've been mentioned before. The capital city is Mexico City, 10 million, around 10 million people. We're 129 million people, a huge market for many different products. We are 2 million square meters country. We have an unemployment rate of 3.89. And we are, as mentioned before, we are leading economy sectors like manufacturing, sale, trade, real estate service, and construction. We have a Mexican peso. Okay, our market, our workforce out of 120 million, we are 53 million people in our workforce. And most of the working force is actually men. Now, let's talk about, you probably noticed report doing business in Mexico, prepared by the World Bank. So out of 190 economies, we appear in the 60th place with a ranking of 72.4. To mention, and the highest rank is New Zealand with 86.8. So, and these are some of the important factors when doing business in another country, according to the World Bank. Starting a business, dealing with construction permits, getting electricity, registering property, getting credit, and so on. So Mexico has good aspects, especially in those in the good rankings like getting credits, and I'm going to get the specific if you might. For instance, in the ranking from 0 to 100, starting a business, we are in the level of 86 out of 100. Dealing with construction permits, 68.8. Getting electricity, 71%, and so on. This is a very interesting, when you want to go and do an analysis doing business in Mexico, this report gives us a lot of light. And as you see, the rankings are of 0 to 100. Most of the rankings are very well positioned for doing business in Mexico, according to the world, right? Compared to another countries in Latin America, Mexico appeared in the second place, just after Chile, and very close to also to Colombia. So the ease of the facility to doing business is we are the second place in Latin America. Now, difficult in any country to understand the tax, and I don't pretend to explain all the tax structure that's actually like very complicated, but I wanted just to mention some important things that we must know when doing business with Mexico. Of course, we have the most important taxes are the income tax, the value-added tax that is complicated because it's different across the regions. We have a production and service tax, and there are some other taxes. Companies must distribute and pay an amount of 10% tax profit to employees. This is an annual payment. Super important. Professor Raul and Professor Martinez were mentioning the investment in Mexico. Many of those companies have something that is called maquiladoras. You probably heard that. That's a huge program, very important for our economy, on which a company located in Mexico, the production, the assembly, they get a special permit to tax duty reductions once with the requirement that they do assembly for export. So it's a very important program for Mexico because many companies, especially in the north part of the country, they do have this special permit, right? Mexico belongs to the OSCSG, and the test base and rates, the specifics are very complicated, but we must know that the corporate rate for ISR is 30% and goes all the way to 35%, right? So, and this is from Deloitte, and so every time a company is investing in Mexico, it's super recommended to have a very specific explanation of the classic structure. Now, let's move to a little bit of cultural comparatives. This is from Hofstede, where we compare the cultural dimensions. And it's super interesting how Mexico and China were very similar in some aspects, and not that similar in other aspects. And if you allow me, Professor Shen, I'm going to go very quickly to these comparatives. Because it is important to understand how do we behave according to these comparatives. Mexico is a hierarchical society. We respect order, and that's very important to know. We are a collective society. Yes, we respect family, we respect our groups, we respect our belonging, and that's very important for everybody to understand. We are a masculine society, meaning that we expect managers, directors to be decisive and assertive. We are a country that we have a very high preference for avoiding uncertainty, right? So we follow the rules. Yeah, we are very cultural oriented in that sense. We are a society that has a high respect for traditions. We have a long-term orientation. Yeah, the country, and we are a country on the other side with a tendency towards indulgence, meaning, Professor, that we are positive people and we like to enjoy life and we show life, right? So we speak Spanish. Of course, we have many other languages speaking in our country, and at least 68 languages. And you probably know that the Mexican cuisine was added to the UNESCO. All of you hopefully have enjoyed a chocolate, a tortilla, some tacos, tequila, corn, and many species of chili. This is very popular in Mexico. And you can see here, we have a lot of cultural manifestations. So why do we go to Mexico? Well, we have well-educated labor force in all levels. We have a relative labor cost compared to other countries. As Dr. Montalvo mentioned, we have a huge consumer base in Mexico, 120 million. We're expecting and ready for investment, and we are encouraging growth in all sectors. What is a challenge? Well, depending on the US economy, it's always been a challenge for Mexico. Yeah? But again, being so dependent on the US economy is a gateway to Mexico. As Dr. Raul mentioned, it's super important whoever wants to do business in Mexico to understand the specific vocation of every region. Right? Every region has a different vocation. It's not like a single Mexico. Every region has different aspect clusters, right? And of course, like many other countries, it's super important to managing all the compliance, all the taxes, all the permits, all the regulation. So, if you want to go to Mexico, we recommend this. Take advantage of the Mexico Free Trade Agreements. We have many. We have with the US, we have with Europe, we have with different countries in Latin America. Understanding the rules of origin, understanding the components, understanding the procedures, then it's a great advantage for our economy. As Raul and Jorge mentioned, get a good local representation, a good partner. It's important for Mexico. It's important for us, for you, and everybody doing business in Mexico to understand the culture, right? As mentioned here, we are growing in infrastructure. Yeah, we're developing different things in different parts of the country. But you have to understand, and you have to reach their search market. What do Mexicans buy it? What do Mexicans eat it? And as mentioned here, there are different sectors and different type of families. So it's not that all the Mexicans are buying the same thing. It's very important to understand. Of course, when negotiating with the Mexicans, choose the right payment terms. There are many, the Incoterms is super important to be very clear on the payment terms. It's very important to have the paperwork. We are a country that you were used to paper in the past. Now we're becoming digital, but it's super important in our business. Make a good impression, because we are people who like to be trusted. We have to earn trust with our partners. It's very important. I guess we shared that. So this is very quickly, I wanted to share with you, important, we respect a lot of national holidays. We have many, I want just to mention New Year's Eve, Constitution Day, birth of Benito Juarez, one of the most important presidents in Mexico, Labor Day, Independence Day, Revolution Day, Christmas, of course. So these are very important for the Mexican people and for business. And if you might, Professor Shane, let me show you some beautiful pictures of our country. Guelaguetza is a beautiful dance in the south of Mexico. I will mention Oaxaca, southeast Mexico. It's a colorful dance with a lot of flowers and these beautiful presents. Day of the Dead, you probably hear this celebration. It's a beautiful celebration across the country with a lot of flowers. We respect the dead. And it's very important for the rest of the world to understand that. You've probably seen the Katrinas. It's part of our culture. Even for the business, it's important to understand the Day of the Dead. We celebrate it. We have many fairs, and this is in central Mexico, Aguascalientes. They used to have, well, before the pandemic, a beautiful fair with many activities, a lot of cultural activities. So, and this is, we have a big festivity on the Independence Day all over the country. And that's very important to understand in terms of business. So, thank you, Chechen, and welcome to Mexico.
Thank you, Professor Enchio. I have a question regarding the Mexican culture. You show one of the chart comparing Chinese culture with Mexican culture along the Hofstede dimensions. One dimension which is a little bit surprise to me, which is the uncertainty avoidance, which shows in Mexico the uncertainty avoidance is relatively high. Can you give us some examples, or can we go back to the chart?
Yeah, let me share screen.
So
this is the one you refer.
Exactly, yes. I think many dimensions such as power distance, individualism, masculinity, they are very close. I think Chinese culture has a lot in common with the Mexican culture. Then you see the long-term orientation, uncertainty avoidance, then you have a kind of opposite. Can you explain a little bit or give us example on this?
Look, Mexico is very interesting your question, Professor. I would say that Mexico is a country of contrast. My best answer for that is the sense that we share at the same time these traditional cultures, at the same time there's with the modern culture. And probably that's why we sometimes find ourselves a little bit contradicted in these comparatives. Right? That's very interesting how in any city, in any family, you will see at least the old Mexican traditions, respecting a lot culture, respecting the power structure, respecting the group. But also you see all the new generations being more open to changes, more open to new ideas, more open to structures. And that's very important that you mentioned, because right now organizations, companies, public sector and all are facing this situation where you find different mentalities of a country that is evolving. Yeah? And that's something that my potential explanation for that question, Professor Shen.
The one thing I was asking is that if there would be a Chinese businessman going to Mexico and trying to do business, and the first thing he might ask, he might think, okay, other country, it works like in China. You have to look at which industry you can invest, which industry you cannot invest. Are there anything such as a negative list in Mexico? No?
You mean negative list of industries?
Yes, in terms of what kind of industry foreign investor can and cannot invest. So how free is the market in terms of investment, in terms of industry?
Well, according to regulation, there are several sectors that are only for the Mexicans, and there are most of the sectors are open for foreign investment. And probably Professor Raul has more more information on this, but according to the Constitution and the foreign investment regulations, there are several sectors, especially the oil producer, the oil, the gas, the some specific that are only for the Mexican government.
Thank you. Well, are there any questions and comments? I would like to also hand over open up the discussion session and hand over the mic to the audience. Any comments and questions from the audience? I mean, not only for Professor Enciso, also for other two experts.
Good afternoon and buenas noches in Mexico. Thank you very much for your very interesting remarks. I would have many questions for you and of course for Professor Tonji. In your last question, it's important to mention because this is something that is difficult, it's a little bit difficult to understand for us Mexican people, is that in China, there is a list in fields like communications, energy, national security, of course, that are not allowed for foreign investment. So in this sense, we don't have that kind of list in Mexico. Maybe it could be interesting for our Chinese friends, Dr. Martinez, to have information about how are we doing in Mexico in terms of the electronic payments.
Yes, of course. Well, there is a growing fintech market, and there are a lot of alliances with PayPal and some other big players in electronic payments, and everything has to do with the bank. Well, what would be en español decimos la bancarización, the banking process of acquiring accounts for the general public. So the acquiring of accounts for the general public is very low in Mexico, unfortunately. It would be something around 39%. And a way that some countries that have not a lot of banks, there are around 60 banks in Mexico, 50 of them are active, and really 80% of the market is on the first 10. We are very underbanked, if you will, and so that is one aspect. The other aspect is the cellular phones, and the internet. The internet does not cover the whole of Mexico. It has to do with the GDP per capita and the relative poverty level, and the pandemic doesn't help at all in that. So I might say that there are some processes going on that are trying to help on this, on the electronic payments. There's a new technology introduced by the Bank of Mexico called the EGADE, which is kind of an electronic code for everyone to use through the phone, so they will have access to their accounts and so on. And those are going ahead, but again, for example, credit to GDP in Mexico must be somewhere around 40, and that is very low. And the number of people that have a savings account is even below that line. And the number of people that have a cellular phone that is intelligent, an intelligent phone, that might be less than 70, according to my statistics. But I'm not an expert on this. But trying to help with the question, I might say that there are a big number of fintechs out there, but we're still behind. We are still behind, I would guess. Thank you.
But that reminds me also a little bit the Chinese situation. As you mentioned, the penetration of banking account is relatively low, but for China, you definitely also have a similar phenomenon on the countryside. But the solution to that is kind of fintech, as I just said, Alibaba's solution where you have a leapfrogging phenomenon. Instead of opening bank account, they start to transfer money through smartphones or mobile phone. And also, this could be an interesting track for development and for Mexico as well, from my point of view. Yeah.
It could be the problem in Mexico also with the phones is the rate of crime through phones, and that is why there are some laws in the Mexican judicial system that prevents banking to occur through the phone at this point in Mexico. There are some laws that are an obstacle for that to happen, just like it is happening in China, and it happened before China. It happened in a very vast way in Kenya. If you know this case, the case of Kenya, almost 100% of people in Kenya do banking through the phone. But in Mexico, we have a law against some of the elements that you need to do banking through the phone, precisely because of the crime.
Thank you very much. Okay, if there be no other question, I would like to thank you for your time and also for sharing your insights. I also learned a lot, but definitely there's still a lot to learn more about Mexico as well as your school. Again, thanks from Shanghai and all the best. And buenas noches. Thank you. And hasta luego.
Hasta luego. Thank you very much, Professor Chang. And we put our mails in the chat. If anyone has a further question regarding any of these topics, please feel free to email us.
We'll do so. Thank you.
Specific questions. Thank you.
Thank you very much, everyone.
Thank you.